Okay, Vince, we're going to start this cage match with a little look back. Remember, it's October 2022. I sound the alarms about rising insurance down in Florida. Mm-hmm. I didn't know actually how bad it was going to get, but it is it's resulting from a lot of things that we're seeing with climate change. We're obviously seeing premiums just through the roof, just companies just shutting down their operations in some cases. But climate change is a major contributor to this. What are your feelings about how climate change has impacted? And once again, I'm right. I don't always like Michael Burry. I'm not always timed right, but I am always right in the end. So, what are your feelings about climate change impact on housing?
Wow, that's kind of open-ended. It's not just what's happening with insurance rates in various states
100%.
And whether or not those insurance rates ought to be taken by the state insurance regulators and crammed back down so that they're a more reasonable rate. That's a whole different conversation that we should have here.
Like nationalizing insurance companies?
No, I said by the states. Let the states go ahead and cram it back down instead of being in the pocket of the insurance companies. That's what I think ought to happen, because they're going to have to do it at one way or another if they want to actually have a housing markets in Florida and California. That's going to have to happen. In any event, I do think that there are issues with what's happening with climate and with housing. I do also think that there's a real problem that's out there right now. In that, I say a real problem that I have a question about, okay? So just recently, there was this gathering, AmeriCatalyst, bringing in government folks, agency folks, insurers, and people from the mortgage industry to talk about the effect of climate change on housing and what needs to happen, particularly in the lending environment. It was a fascinating conversation. It was invitation only. We had our reporters there. But here was who wasn't there. The lenders. The lenders weren't there. One or two risk managers for some of the big lenders had shown up, one or two. But for the most part, the lenders didn't pay any attention to it.
There are some lenders there. You can't say none.
Yeah, well, given the whole scope of lenders that are in the nation, having two or three doesn't really count as having a strong industry presence.
Yeah,
if we're thinking that this is a big to-do.
Yeah.
I think that maybe the issue here is there is climate change. There are issues that are affecting us. There's still some question as to whether these are transitory issues or whether they are permanent issues, and which is why some of the lenders probably aren't necessarily paying attention right now, because they may be thinking some of this is more transitory.
Yeah, and I think, listen, lenders are also by default, we're a reactive bunch. Like we will change, we'll adopt and do whatever we need to do, but sometimes we need a little bit of, oh my goodness, I'm going to say the R word, regulation to have us do this. I mean,
we need a kick in the pants, or we need a real catastrophe. But part of that is also because there's so much, doom and gloom out there. Listen, this is a very quick anecdote. 20 years ago, we're here. We are recording this in Connecticut, and there was a group, the Connecticut Community Bankers Association, the folks who were lending in all the towns and stuff, and they had a monthly meeting, and they had a speaker there, a guest speaker, lots of charts, lots of graphs, very good. This guy knew his stuff. And it was all about how climate change was affecting the Connecticut shoreline. And Connecticut has a lot of shoreline along Long Island Sound. And the climate change activist was like, holy smokes, look what's happening. You're going to see rising sea levels. You're going to see erosion. If you have loans for all these properties along the Connecticut shoreline, you can kiss those loans goodbye. Now, it was a very dark and dire warning, and it was 20 years ago, and none of those loans have gone bad since then. You begin to tune this stuff out if it becomes too catastrophic, too cataclysmic. You must do this stuff, or the world is going to fall in. And I think that that's one issue that some of our lenders are facing now. They need to see this in a more not progressive in the sort of future, but in terms of a little bit of progress here, a little bit of progress there, steps at a time to move forward. And they don't really have any incentive to do much of anything at this point either.
Well, the insurance companies are maybe forcing that scenario down there because in the cost of insurance is impacting affordability. You have in some cases where you have the principal and interest is almost parity with the taxes and insurance.
Right, and I get that, and that's why I'm saying what's going to happen in those states. We know it's going to happen. Because you know why? This isn't affecting the lenders. This really isn't even affecting the real estate agents. It's not even affecting the insurers. It's affecting the buyers and sellers.
No.
Buyers and sellers are voters. And they will turn to their government and they will say, you, government in Florida, you, government in California, need to do something about this. And there will be programs that either create state-funded programs, or there will be where the commissions turn to the private insurers and they will say, we are going to mandate these kinds of price changes for you. It's going to happen.
I agree, but there's nothing to even fight with this one. I agree with this one. Yeah, we're in lockstep, unfortunately, which is not a great thing.
Well,
and I think one of the things. So Ryan went and he said that
Ryan Kingsley, one of our staff writers, who's big on this. Yeah.
Yeah, and he basically said that there's no solutions. There's no one's talking about solutions.
That is a problem, right? That is the problem.
Yeah.
Because I'm not sure that they're recognizing that there is necessarily a problem. They know that there's a problem right now.
Yeah.
But those of us who are old lived through gas lines in the 1970s. There wasn't going to be any more oil.
Yeah.
Oil was going to be gone. And yet here we are. We still have oil. We still have cars. We still have gasoline. A lot of folks go, let's wait to see if all the the henny penny, the sky is falling stuff disappears, and we're patient about this a year or two. I'm not saying that you ought to be patient. I'm saying that that's what their approach is, because otherwise it's very expensive. The answers that you start to come up with have big price tags on them.
Well, no one wins in this one. It's not the insurance company. It's not the mortgage company. It's certainly not the borrowers.
Right. And it's
not
not
us.
you,
Yeah.
but it is me.
So, wait, no, you
because,
can't.
I declare victory.
No, wait, no, you can't. That's not how this works. No, it's not.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.